Okay, so you've just bought a house. Huge step. And somewhere in that mountain of paperwork, there's usually this offer, right? Mortgage life insurance.
Exactly. It sounds good on the surface. If the worst happens, the mortgage gets paid off, your family's protected. Simple.
Seems simple, yeah. But we're diving into a source today, that CBC Marketplace investigation, which suggests maybe it's not quite so simple.
Right, that convenience factor, it might hide some pretty serious potential issues.
Yeah.
That's what we're digging into.
And the core of it seems to be this term, post-claim underwriting. What exactly is that?
Okay, so think about it like this. You sign up, you start paying your premiums every month, feeling secure, covered. But the insurance company, they don't really dig deep into your medical history or your eligibility until after someone files a claim.
So after the person has passed away.
Precisely. That's when they do the real checking, which, feels a bit backward.
Backward is one word for it. It sounds like the risk is all on the policyholder, not the insurer.
That's pretty much it. They collect the money, but the guarantee. That only gets tested later, often when the family is grieving.
And the CBC piece highlighted some really tough stories. Leslie's story, for example.
Yeah, Leslie's case was really striking. Her husband, Chris, he had this mortgage life insurance policy from their bank. He passed away very unexpectedly.
And she thought, okay, at least the house is covered.
That's what anyone would assume. But the claim, denied.
Denied. On what grounds?
They cited a heart issue that he supposedly hadn't disclosed. But the thing is, he apparently never knew about it. It was undiagnosed.
Oh, so he couldn't disclose something he didn't know he had? And they denied the claim based on that?
That's what happened. Imagine dealing with that loss and then finding out the financial safety net you thought you had just wasn't there.
That's devastating. And it wasn't just her, right? There was another case mentioned.
Yes, Gwen and Ken,
Yeah.
Similar situation, different details. They paid premiums for years. Years.
Right.
Ken eventually died from cancer. Gwen filed the claim. Denied again.
Why this time?
A pre-existing condition, supposedly. Something they said he didn't mention when they signed up.
Okay, but was it something serious, something they should have known to mention?
Well, according to the report, it was something relatively minor. And crucially, the insurance person apparently didn't specifically ask about that kind of thing. So how would Ken know to bring it up?
It sounds like a loophole. Years of payments, thinking you're secure, and then denied on a technicality almost.
Exactly. And Marketplace found these weren't just one-off cases. It seemed to be a pattern linked to this post-claim underwriting approach.
So the convenience of getting it bundled with your mortgage, maybe not worth the potential downside. What's the takeaway then?
Well, it certainly makes you question if that convenience offered by the lender is the most reliable way to protect your family. The investigation really points towards considering alternatives.
Like getting your own separate life insurance.
Precisely. A personal life insurance policy. Term life insurance is often recommended.
And the key difference there is the underwriting part, right?
Yes, that's the crucial distinction. With personal life insurance, the insurance company does the thorough checks, the underwriting, before they issue the policy, up front.
Ah, so you know from the get-go whether you're actually approved and what you're covered for. No surprises later.
Exactly. There's clarity, there's certainty. Your loved ones aren't likely to face a sudden denial during, an already incredibly painful time.
It makes sense. That initial convenience of the mortgage add-on seems less appealing when you hear about stories like Leslie's or Gwen's. That superficial check might not be the security you think it is.
Absolutely. The last thing anyone needs while grieving is a financial battle caused by fine print they weren't fully aware of.
So wrapping up, it leaves us with a thought, doesn't it? When we're making these big financial moves, supposedly for protection.
Yeah, how much are we really looking past the convenience? Are we digging into the details to make sure the protection is actually truly there when it's needed most? Exploring all the options for real transparency and security. Something to think about.